Hello folks, this video recording was actually meant for my niece. Since she's busy, she is having a day job, so I thought why not record it and post publicly so that many other will get benefited. So so I'll be posting about Indian markets, specifically Nifty. So this video will be about just a review, guys. So I'll try to post as regular as possible. So let's jump in. So this is the Nifty 50 chart, daily chart. So before going to the next day of trading, always mark the nearest premium discount address on your chart on a daily or weekly or monthly from higher time frame to lower time frame. So this is what you have to do daily. So since this is a daily chart, so I want to review price action on Friday. So before Friday, let us review what are the nearest PD arrays on the closing day of Thursday. So you can see straight away here we have volume balance. So I'll just name it as daily volume balance. So this is daily volume balance for you. Then we have this huge suspension block from here to here. This is a bearish one. So let us make it red. So this will be the bearish suspension block. So let us write this bearish suspension block. This will make it blue. So this suspension block I'm drawing from this volume balance to this volume balance. So generally if you draw the bearish fair value gap, it will come from this wick to this wick. But since the candle which has created the bearish fair value gap has also volume balance associated at the high and bottom of the candle, so you need to include these two volume balances also. Then we'll be calling it as a suspension block. Since it is bearish, we'll call it as bearish suspension block. And at the bottom side, what are the discount levels? So again we have this one more suspension block from here to here. Since this is bullish, I'll just change the color of this into blue. Okay. So we are trying to review the price action on Friday. So we have this huge wick here, huge wick. So let us grade that wick into quadrants. So I'm grading this daily wick into 4 quadrants. And also we have this volume balance on the daily chart. And also we have this wick here. If you observe, of these two wicks, which one is bigger? This wick is big. So let us grade this wick. Okay. So this is the bullish fair value gap on the bottom side. Sorry. Oh. So these are the PDRS we marked. So one is this daily volume balance in the yellow color, and next is this bearish suspension block, and next we have this daily fair value gap in the discount. Then we have this huge wick. So we have graded this huge wick into 4 quadrants, and then we also have this let me change this color to something else, this volume balance. Oh, I want something distinct. Okay, so this part is the daily volume balance, and then we graded this wick because this wick is bigger than this wick. So we graded this wick also into 4 quadrants here. Prices, save as we want, dashed. Okay, the prices are getting. Now it should reflect. I was trying to get this price levels, guys. So now that we have marked all this PDRS on the daily chart, then we'll move on to the lower time frames. So this was the daily chart, and we'll make this a 15-minute chart. 15-minute chart, and in the 15-minute chart, we want all these things here: daily volume balance and suspension block, right? Yeah, bearish suspension block, daily bullish fair value gap. This is the daily bullish fair value. Okay. So this will make it 5-minute chart. And this is 1 minute. This is 1 minute, and let it make 15 seconds. So the market has opened here, and straight away you can see the market opened here and rejected from this daily volume balance, and we have this consolidation. Sorry, I think Friday's opening is here, guys. Sorry, Friday opening is here. I'm sorry, Friday opening is here. So the market opened up here and it was consolidating. So here on a 5-minute chart, let me mark this bullish fair value gap. So clearly you can see this bullish fair value gap. I'll make it blue. So this is very clear, guys. It should be very clear. Here also it should be very clear. So we had the market open here and it's consolidating and consolidating. But here if you see, we had a bullish fair value gap here. And then the market closed this bullish fair value gap with a single candle. So now this will become a balanced price range because we had both buy side and sell side offered in this range. So now this part of the price when it comes back up here, it should not cross the 50% of this range. So it should stay below 50%. The wicks can go above 50%, but the bodies of the candle should remain below 50%. So once this candle closed below, we wait for the price to come back into this zone. So this is where we'll enter inside this balanced price range. So this would have been our entry. So where is it? Short position. So here just at this position we would have gone short. And our stop loss would have been on the top of this candle. Or for the safe side, what you could have done is you can put above this. But if you are confident, since this entire single candle was closed with this single candle, this will become a strong balanced price range and price should not even come up to 50% of this. So this would have been your stop loss on top of this candle and your take profit would have been so where do I have the liquidity? So these are the swing lows. There is one more swing low and you have your daily bullish fair value gap and the midpoint of this daily candle wick. So you have first target, second target, top of this third target, and this would be fourth target. So I'll just highlight each target. So this would have been your first target, this would have been your second target, and this would have been your third target, and this would have been your fourth target, midpoint of this daily wick. So I'll just highlight first target, so this was the first target. This would be the second target. So this would have been the third target. So this will become your fourth target. So what do I mean this first, second, third and fourth is you need to take partials at regular intervals. So this would have been easily anticipated. So you could have taken your first partial here. So when price hits this daily bullish fair value gap, you could have taken your second partial and this would have been your ultimate final partial. So by the time it reaches your third target, you should be closed at least 80% of your positions, guys. So that is how you map your PD arrays on the daily chart, and then you look for executions on the lower time frames. See, the opening was really messy, guys. There was nothing happening here, but when price did close below this bullish fair value gap, you had this balanced price range. Then when price came back in here, you could have entered here and you could have exited in your third, fourth target. So this would have been your one trade. And here you could have taken one more entry on the lower time frames. When price closed again below the midpoint of this with energy. So at this point you could have entered, you could have permitted your second position, and then you could have exited at the top of this bullish fair value gap and at the midpoint of the daily wick. Now the same thing I'll show on a option chart. So the entry was around somewhere here, right? So around 25,240. So what was the nearest option for us? 25,250 put. So we'll go to the option and 25,250 put. So this was the nearest put. So the entry was around 1245. So let me go into lower time frame. $12.45. Yeah. So this was the entry, guys. 12.45. So here you would have gone long. And your stop loss would have been below the midpoint of this wick, and your exit was almost top somewhere here, or you could have exited above this swing high, guys. So this was a trade. So this was a trade you could have taken. So this was a decent trade with a risk to reward of 1:5. Since it was Friday, you should not be looking for multiple trades, guys. Try to find one reasonable trade with good logic, and that's it. You can see here this is the new day opening gap, and see how price was accumulating around here, consolidating, adding more positions to their longs, and there you go. And here also you can see the reaction from the midpoint of this new day opening gap. Here rejection from this bearish fair value gap, back at the top of this new day opening gap, and then targeted all this liquidity, swing high, swing high. So but you could have exited here and you could have closed the trade, and in between you could have taken the partials. So this was one trade. So I just want to go back onto the daily chart to emphasize how you have to plan your trade based on the daily chart PD arrays. So when the day opened here, you can see straight away the daily candle never went above 50% of this volume imbalance and straight away rejected. but the problem is the price was consolidating here. It did not give us clear indication. But on the lower time frame, once it crossed below this bullish fair value gap on a 5-minute chart, then we had a clear bullish inversion. Then we went short here, and our targets were already mapped on the daily chart. So now the problem is this candle did not close below 50% of this wick. So for the next week, what we should be focusing is we should be waiting for the candle to close below this and below the midpoint of this fair value gap. Then what we could target as the nearest to liquidity is this swing low, this swing low, and this swing low. But only when price closes below this bullish fair value gap, then it will act as an inversion, then we can go short. So for the coming week, these will be my targets provided price closes below this bullish fair value gap with the body. So these are the sell side liquidity I will be interested in, because these are low resistance liquidity run signatures. None of the swing lows were being taken out. So the condition is price has to close below this this. Oh my god, I'll remove this. What is happening? I did remove that, right? Yeah. So when price closes below, this is a bearish candle. So when price closes below this bullish fair value gap, this suspension block, bullish suspension block, on the daily chart with the daily candle, I want to see a closure with the body, not wick. So once this happens, then we can go looking for short positions, this and this. Meanwhile, you have this PDRS to mark when price is coming down. So since this is a bearish one, I'll mark with a thread. So I'll be looking my targets. Say for example, this rejects from the midpoint of this wick, and then the next target would be midpoint of this bullish suspension block. The next target would be midpoint of this volume balance, and next target would be this small bullish fair value gap, and the next target would be this swing low, and again here we have a small bearish volume balance, and then this swing low and this swing low. So these will be my targets, guys. So I'll be observing how price will be reacting to these discount PDRS, whether it is going to respect it or whether we are going to just bulldoze these PDRS. So this is what my anticipation for the coming week. If price closes below this bullish suspension block, then I'll be looking how price is going to react inside this bearish volume balance. So once again it closes below this, we have small bullish volume balance, bullish fair value gap. I think price should easily close below this. So once it closes below this, this should act as a inversion fair value gap, and from here we can target this swing low, this volume balance, and this swing low and this swing low. So always plan your, so before trading for the upcoming day, always do this analysis on a daily and higher time frame charts, so that it will be clear. you'll not be in a panic position or shock like suddenly the market opens in another way. And similarly, since price has opened here, the PDRS which we crossed are this bearish suspension block, this bearish volume balance, these things should act as resistance. So when price, say suppose on Monday it goes back up, I'll be looking to short from these positions. If on a low time frames, I'm looking for short positions. So if price is rejecting from here, then I'll be looking for the nearest PDRS to target my profits. That would be midpoint of this suspension block. Next is this daily volume balance and so on. Already marked all these things. So this lecture is for my niece, guys, because she is working and she is busy, so we can't come live. So that is the reason I'm recording this, and I'll be uploading to YouTube. Whoever is watching this can benefit from this. So that's it, guys. Thank you.